Hello everyone, Nick Fenton here with TickerTank.com. Today I just want to show you the position statement setup that I use. And I'm doing it in my paper money account because I don't want to show all my existing positions or my account balances for obvious reasons, since this is going to be all over the internet. Just a quick note, in my paper money account I haven't been in here in a little while, so there's all these old positions that I just cleared out, but they won't actually be completely cleared out until tomorrow. So just ignore all these existing positions. This is how long it's been since I've been in this account. There was still an R hat open position, so we'll see. Anyway, first thing you do, make sure on your position statement tab, if you have this old layout, make sure you click Switch to New Layout. Once you're switched into New Layout, you'll see this little wrench icon over here on the right. Click that, and that's going to bring up your customization. So here's the defaults, and we're going to make some modifications to the defaults. First, I'm going to add a few things here. I'm going to add trade price, and I'm going to add days. Now I'm going to remove gamma. I just don't really use gamma. And I'm going to modify the order to make it a little bit more intuitive the way I like to see it. So keeping quantity at the top, I'm going to move days up just under quantity. Then I'm going to move trade price just under days, mark under trade price, mark change under mark, and change that order to delta, vega, theta. So what is this going to show us? First, it's going to show us the quantity of the options position that we're in. So let's say you sell 1 naked call, the quantity will be 1. Let's say you sell 10 naked calls, the quantity will be 10. Let's say you sell 20 iron condors, that'll be 20 spreads, the quantity will be 20. Days is the amount of days left until expiration in whatever month you're in that position, that options position. Trade price is going to be the price on the entire spread, as well as the individual legs associated with that particular spread at entry. So the price at entry, so the trade price you enter the trade at. Mark is going to be the current market price. So basically, let's say you entered an iron condor at $1.80, and the current price is $1.20. The trade price will say $1.80, reflecting your entry price, sold to open for $1.80. Mark will say $1.20, and then each individual leg will be based on what the trade price was under the trade price column and what the current market price is under the mark column. Mark change is going to be what the entire spread has changed that day and what each individual leg, if it's a spread, has changed that day. Delta reflects your delta, which is the amount the spread or the individual legs move for every 1 point move in the underlying. Vega represents your volatility, and theta represents your time decay in the options. So we've got that lined up here. So you can see in the position statement under equity and equity options, it's going to of course show the instrument, quantity, days, trade price, mark change, delta, vega, theta, and then the thing you can't ever change, which you don't want to change. These are just standardized: profit loss since opening the position, profit and loss on that position that day, so today, and the buying power effect of said position. So let's just pop one up real quick to kind of show you. And let's look at SLW. You can see current IV percentile 58%. Let's just do something simple, sell naked put. We're going to open up December with 63 days left until expiration. Now let's look for something with a decent return on capital. So this right here, the 20s, are giving you a 29% return on capital, which is just under 0.5% per day if you divide that by 63 days. So let's sell the 20 puts, and we'll just sell it at the natural price. You can see the mid-nat spread is currently 1 cent, so these are very liquid options we're dealing with. Natural price is going to be an easy fill. If you move it up to the mid price, you can see it's telling you, well, the mid just moved. It's telling you it requires 5 cent downside move. So we'll unlock it, change it back to the nat, and confirm and send. Should fill right away. Yep, We got the fill. So let's go to our position statement. We just sold 10 SLWs, and we'll expand this here. So it's going to show you we sold the December 13/20 put, quantity 10, days left until expiration 63, trade price 60, current mark price 59, mark change on the day 2 cents plus 2. And it's going to show you your delta, vega, and theta for that particular position. It's going to show your profit loss since opened is $10. We have 10 spreads. Our trade price was 60. Current price is 59, so that's a $1 profit already, times 10 spreads, or 10 contracts rather. And our profit loss on day is 10. You can see over here on the far right, buying power effect for doing said trade, $1,793.31. Now this is a portfolio margin paper money account, so that may be a little lower than what your buying power effect is in this particular thing. But I just wanted to show you the way that I do my position statement layout. This is just a nice intuitive order for me. I like the flow. Since I pretty much only trade options, this works out great for me. And I really don't pay too close of attention to delta, vega, theta in most cases. More so paying attention to quantity, days, trade price, mark change. And of course, profit loss, open and day, and buying power effect are very important as well. That's it. Hope you enjoyed. If you have any questions, feel free to leave it in the comment section.